And we're very comfortable that some of the initiatives that we're doing, some of the changes are getting the market ready for a great next couple of years. We want to grow our company, and at the same time investors are saying, I want to be part of the exciting companies of tomorrow. Well, maybe this is a company that can go to the public markets, even though you may not have the revenues, even though you may not have the profitability, and because we are helping create the companies of tomorrow. And it aligns perfect with some of the long-term objectives of making sure that we're totally part of this technology revolution and we're not staying behind. Hong Kong Exchange is a super connector between East and West. We want to be that channel, that platform that allows companies to benefit of the best of all the world.
Hi Nicholas, thanks for joining us. As we know, Hong Kong IPO market has suffered a lot due to weakening economy and rising interest rates. So how is the pipeline right now? Can you share a bit more on that?
So it's been a difficult year for most markets around the world. The one thing that is worth highlighting is the onshore markets were actually quite active. So if we look at Shanghai and Shenzhen, they were very active. If we look at Hong Kong, it's somewhere in the middle, in the sense that we had close to 70 IPOs, 68 I believe is the right number, raising almost 90 billion in capital. And if we look at the difference between the first half and the second part, we saw a big increase in the second part. So we're seeing some green shoots in activity, which is very positive. Investors seems to be a bit more receptive. And our pipeline right now, it's a little over 130 companies that have filed their A1s, and they're waiting to go through the process. We think it's a lot of good and exciting companies for the future. And we're very comfortable that some of the initiatives that we're doing, some of the changes are getting the market ready for a great next couple of years.
As a former banker, you know the IPO market very well, I'm sure. So what are the key catalysts that will bring the IPO activities back to like the pre-COVID level?
So in terms of candidates and companies that want to list on our market, over the last few years, we've been more geared towards new economy companies. We've seen companies in sectors like e-commerce, a lot of the biotechnology companies and the more future-related companies. They are the ones that have indicated a strong interest in participating in. We try to cater for companies from all sectors to come here. We also need to make sure that we have sufficient interest and confidence from investors from around the world. Over the last couple of years, we saw a very challenging global macro environment with a lot of issues around rising inflation, increasing interest rate, risks of a possible recession in the more developed markets. So those are the ones that softened a little bit the risk appetite of investors on the demand side. Yes. Correct. So you need both to be playing quite well to make sure that the market is vibrant.
Yeah, definitely. Mm-hmm. The exchange has launched the consultation upon the specialist technology listing in October. Mm-hmm. So to what extent do you expect this new regime will help attract more technology listing into Hong Kong?
Yes, I'm very excited about the potential of this new listing regime that we're consulting on. Similar to what happened in 2018 when we adjusted our regime and fundamentally around the biotechnology sector, we allowed biotech companies to be part of our market even though they may not have any revenues. And that was a very successful chapter. Companies didn't even have any revenues at the point that they listed. Hong Kong became, if you accumulate all these last 4 years, the second largest fundraising capital of the world. Now, let's talk about this specialist technology and why this is so important. There are so many companies in China and around the world that are focused on areas like quantum computing, artificial intelligence, space technology, food technology. They are like great sectors, but it requires a lot of investments over multiple years before you see any revenues, any profitability. And those companies need to count on private capital, but also public capital can help them thrive and grow. And so we're seeing a lot of demand for those companies saying, we need capital, we want to fund it, we want to grow our company. And at the same time, investors are saying, I want to be part of the exciting companies of tomorrow. I want to identify those early players. So we're setting up a system by which if you have invested sufficiently in R&D, if you are of a certain size that gives comfort that this is a company that is safe for investors to be part of, if you have a set of investors that invested in your original company, private capital investors that give that confidence, then it generates the right environment to say, well, maybe this is a company that can go to the public markets, even though you may not have the revenues, even though you may not have the profitability, because we are helping create the companies of tomorrow. And it aligns perfect with some of the long-term objectives of making sure that we're totally part of this technology revolution and we're not staying behind.
So during this consultation period, what kind of voices or feedbacks you've got from like both investors and potential companies that are interested to be listed here?
Of course, we're still gathering like some of this feedback, because most of it the consultation will end on December 18th. The early sound bites seem to be very, very good in the sense that we see a lot of excitement, a lot of interest.
The Financial Secretary Paul Chen has told the media earlier that the Hong Kong Exchange is in talks with Saudi Aramco, the world's largest oil company, to get listed in Hong Kong. So how's the talk going on, and what can Hong Kong Exchange bring on the table compared with other competitors?
Yeah, I can't comment on any individual issuers or prospects. What I can say is that one of the qualities that we have is Hong Kong Exchange is a super connector between East and West. We want to be that channel, that platform that allows companies to benefit of the best of all the world, whether it's in China or it's around the world, and to make that connections with great, international issuers. And the Middle East is an area of high growth. I mean, I was there a few weeks ago. I was in Saudi Arabia, as well as Dubai and Abu Dhabi. And what I've seen is that people have a strong interest in connecting. There's an empathy for like what we're doing in terms of fostering development of the market, creating connectivity, investing in technology, finding the companies of tomorrow. So there's a lot of similarities on what the markets are looking for. So we look forward to continuing to act as a connector, and are very excited and bringing people from all over the world. So
as you mentioned earlier, the market has kind of going through a difficult and a rough period, and the exchange has posted a 30% drop in the third quarter profit due to lower trading volumes. So as the new CEO, what measures you have been taken to like boost either more the volume or improve the bottom line?
Yes, obviously the volumes are heavily affected by what's happening in global macroeconomics, in the international markets, in certain domestic markets. So it's always a little bit difficult to control what happens, and we're subject to the ups and downs of markets. And we try not to take decisions based on short-term movements. We have a very constructive view of the future, of the long term, and we want to make sure that we're investing for the long term and continuing to create the right favorable environments for companies to grow, for companies to support the real economy. That is very important. At the same time, to give investors the opportunity to participate in the interesting stories. Now, in doing that, something that we can do to make sure that we enhance the market volume and all that, even during the tough times, is to make sure that we adjust and change our microstructures to make the market as convenient as possible. One of the things that we're doing, for example, in our Stock Connect program, that is a program that connects the mainland markets with Hong Kong markets, what we're trying to do is to make sure that we can trade in days that is just before a public holiday. What used to happen is the day before a public holiday, you couldn't trade because there were issues around settlement. So we've been investing in the infrastructure to make sure that you can have more trading days, and the day before a public holiday, you can trade. Mm-hmm. So that obviously will increase the number of trading days, which means that you will have more trade. Other enhancements that we're doing, for example, in Hong Kong, we still have, but beginning in the 1st of January, that will change. We used to have a trading fee and a trading tariff. The trading fee is as a percentage of each transaction, and the trading tariff is a fixed one. Now we're eliminating the trading tariff, so that the issue was when an investor bought some shares in a company, you don't know if that's going to be 7 transactions, 10 transactions, 20 transactions on the other side. So it was difficult to estimate what the cost is. So we made it, simplify the process, and we have only a trading fee today, which is a fixed percentage, and therefore it's easier for investors to trade. So those are some of the changes that we're doing. More connectivity through Stock Connect. Those are the ones that bring more volume. For example, ETF Connect has been an interesting one. We've done some enhancements around how the ETF ecosystem works in Hong Kong. We adjusted our spread table, which is essentially the difference between buy and sell, and we created some exemptions around stamp duty for creation and redemption of ETFs. And we've seen that ETFs, their volume has increased almost 50-60% in the last year compared with the year before.
That's quite amazing.
Yes.